In the last video, we have learned what is capital expenditure, revenue expenditure, capital receipt and revenue receipt. Based on the same, in this video, we'll take a few problems on classifying capital and revenue. Let us just revise what we have done in the last. Receipt, when it is called as a capital receipt, when it is non-recurring in nature, that is received only once, not again and again. Revenue, when it is recurring in nature, recurring, when we receive the income again and again, we call it as recurring receipt. Expenditure, when it is called as capital, if any one of the three conditions is fulfilled. Number one, a new asset comes into existence. In simple words, a new asset is purchased. Improvement to the existing asset. Improvement means we have done something to the asset that increases the value of the asset. Discharge of fixed liability. In simple terms, a non-recurring expense is been paid. Let's see the transactions. Problem 1. Classify the following into capital and revenue. The first transaction. Legal charges incurred in connection with purchase of land. Now when we purchase the land, we have to get it registered with the government office. And when you get it registered with the government office, with the sub-registrar office, you need to pay some charges. Stamp duties, registration fees. That stamp duty, registration fees, what you pay it only once. You purchase that land, on that land only once that expenses are paid. So let's see, is it capital or revenue? If any one of this is fulfilled, a new asset is purchased. We are not concerned with the new asset purchase, we are concerned with legal charges. So just by paying legal charges, we can't see a new asset comes into existence. It is not improvement to the existing asset. But legal charges, as I said, are paid only once, and that is what it is, a non-recurring expense. Since it is non-recurring expense, it is called as a capital expenditure. Let us see how to write it down. Here comes the answer. So this is how we write down the answer for the transaction. It's a capital expenditure because it is non-recurring expense. Write what is it and further the answer. Let's see the next transaction. Expenses incurred for whitewashing the old building. What is whitewashing? Whitewashing means painting the old building. Let's see. We are painting the old building. Let's see whether it is capital or revenue. By painting the old building, does a new asset comes into existence? No. First condition is not fulfilled. Is it improvement to the existing asset? Does it increase the value of the asset? No. Painting is done not to improve the building, but to maintain the building in a good condition. So that is not improvement, it comes as maintenance. Is it a non-recurring expense? Do you paint the building only once? No. After a few years, we again repaint the building. So it does not fulfill any of the three conditions. When it does not fulfill any of the three conditions, which is not capital, is taken as revenue. So this is a revenue expense. This is how we write down. Revenue expense because it is recurring expense. Let's see the next one. Life membership fees. For non-trading concern, first it is not an expenditure, it is a receipt. Now the question is receipt. What receipt? Capital or revenue? Do we receive the life membership fees again and again from that member? No. From one member, we receive the life membership fees only once. What we receive only once is non-recurring in nature. That is what we call it as a capital receipt. Let us write down the answer for that. Capital receipt, the reason, because it is non-recurring in nature. Let's see the next one. The next is cost of installation of lights and fans. The lights and fans that we install, the cost that we incur, it is not purchase of lights and fans. It is the fitting charges of lights and fans. It's an expenditure. Let's see what expenditure is that. Does a new asset comes into existence only by paying the fitting charges? No. Is it improvement to the existing asset? No. Is it non-recurring expense? Yes, because once you purchase the lights and fans, the fitting charges are paid only once to the electrician. So that is called as a non-recurring expense or discharge of fixed liability. So it fulfills one of the conditions. It is taken as a capital expenditure. Let us write down the answer. So that is what is a capital expenditure, because it is non-recurring in nature. Last transaction of this problem, salary paid to employees. Salary paid to employees. Will you pay the salary only once to the employees or every month? Every month. What you pay again and again. Let's say, does a new asset comes into existence? No. Is it improvement? Salary paid? No. Is it non-recurring? Paid only once? No. It is paid again and again. That means that going to be a revenue expense. Let us write down the answer. Salary paid to employees, revenue expense, because it does not fulfill any of the three conditions. It is recurring in nature. This is how the problems are to be solved. In this video, let us take up one more problem on capital and revenue. Let us take up one more problem. First transaction, subscriptions received. Subscriptions received is an income of a not-profit organization. They receive the subscriptions from the members. Do they receive only once? No. What they receive only once is the life membership fees. Subscriptions are received every year, annually. What we receive again and again is a recurring receipt. Recurring in nature is nothing but revenue receipt. Let's write the answer for it. Revenue receipt, because it is recurring in nature. Let's take the next one. Medical equipment purchased by a hospital. It's an expenditure. Let's see. Is it capital or revenue? What is capital? If any one of the three conditions is fulfilled. By purchasing the medical equipment, a new asset comes into existence because a new asset is purchased. First condition is fulfilled. So it is called as a capital expenditure. Here, the answer. It's a capital expenditure because a new asset is purchased. Write down what is it and the reason for that. Sale of old sports material by a sports club. Sports club is selling the old sports material. When they sell it, they are going to earn the income. So that's going to be receipt. The only question is it recurring or non-recurring? As the sports material get old, they sell it at a lesser price. This thing continues again and again. That means that income they receive again and again by selling the old sports material. So what is it? Recurring or non-recurring? Recurring. Recurring is nothing but a revenue receipt. Let us write down the answer. So sale of old sports material, revenue receipt because it is recurring in nature. Let us take up the next one. Legacy is received. In the earlier videos we have learned what is legacy. Legacy means what? The property received by way of will. By way of will, the property that is received by a non-trading organization after the death of donor is called as legacy. So what is it? Do we receive that property again and again? The person dies only once. His will be executed only once. So that is a non-recurring receipt. Nothing but a capital receipt. Let us write down the answer. Legacy is received, capital receipt, because it is recurring in nature. Let us take up one last transaction. Special donations received for expansion of building. Donations are of two types, general and special. General donations of small amount we receive again and again, revenue. General donations of huge amount we receive only once, that becomes capital. This is general donation. Special donation. Special donation is received with a purpose, and when you receive the donation with a purpose here, expansion of building, that is called as a capital receipt, because it is received only once. Capital receipt, as it is non-recurring in nature. Let's see the answer. Special donations are non-recurring in nature. That is why we call it as a capital receipt. This is just a brief explanation regarding this receipts and expenses, capital and revenue. But you have to remember these conditions. You have to remember what is capital and what is revenue, because as we proceed further, there is a bifurcation needed between revenue and capital item. Because capital items come in the balance sheet, revenue items are taken in the account. If you cannot bifurcate between capital and revenue, you cannot prepare the further accounts. What you remember is this part. And every time when you come across this transaction, we'll discuss these rules and then only we'll proceed further. In this video, we have learned couple of problems on classification of capital and revenue. In the next video, we'll learn how to prepare receipt and payment account. Thank you.